S&P Global has predicted that India will be the world's third largest economy by 2030, surpassing Japan and Germany. The agency expects India's GDP growth to reach 7% in FY27. Meanwhile, Moody's has downgraded China's credit rating from stable to negative on the back of rising debt in the country. Ritu standing by with the details on both those. Ritu, many thanks for joining us. Let's start with India and what S&P has to say.
Well, to begin with, Shireen, the key headline is that China may no longer remain the growth engine of Asia-Pacific economy, and instead, India could take that position. That's the word coming in from their latest global rating report. Now, in that, they also say that Asia-Pacific's economic growth will be driven by South Asia and Southeast Asia, and India could emerge as the third largest economy by 2030. Now, it expects China's GDP to slow from 5.4% this year to 4.6% by 24, and then edge up to 4.8% before it returns to 4.6% by 2026. The turmoil in their property market, along with the high leverage on corporate and global, local government balance sheets, is expected to remain a drag on China's economy. But on the other hand, you have India's GDP for this fiscal year, which is predicted to hit about 6.4%. That is expected to go all the way up to 7% by FY27, remain the world's fastest growing economy. India, that is, followed by Vietnam, Philippines, and the Indonesia in this region. Now, S&P says a paramount test is going to be whether India can become the next big global manufacturing hub, and developing a strong logistics framework for that is going to be very key. Unlocking the labor market potential, S&P says, is going to largely depend on upskilling the workforce here and increasing female participation in our workforce. And success in these areas is going to enable India to realize its demographic dividend. It also says that the booming digital market could fuel expansion in our high-growing startup ecosystem during the next decade specifically, and also expects a positive outlook on the automotive sector. Now, going forward, it's not just S&P that's saying that. You also had Moody's that today cut the outlook on China's government credit rating to negative from stable earlier, and it cited lower medium-term economic growth and risks from a major correction in China's large property sector. Now, Moody's has said that this downgrade reflects the growing evidence that authorities there are going to have to provide financial support for the debt-laden local government and state firms, and that poses a broad risk to China's fiscal, economic, and institutional strength. Now, China, of course, has long been the engine of growth for the world, and this current slowdown, coupled with our improving prospects, it does augur well for India. But to fill a China-sized gap in the global economy, India, of course, still has a long way to go.
Ritu, many thanks for joining us. Well,